Hello, and welcome to Rocket Fuel, your daily update of everything that's happening in the Rocket Pool and Ethereum communities. My name is Wack. Today is April 25th, and today's episode is going to cover some design updates from Sleety that he's been working on that are really cool that I want to share with you all. On the staking side, Beacon Chain is ready for Pectra, and we've got a client update. On the Ethereum side, we've got more detailed summary of yesterday's all-core devs call. We've got some really interesting details going on in the gas limit research, and we're going to be talking about tokenization coming and a whole lot more. So let's get started.
10, 9, ignition sequence start, 6.
So we're actually going to start here with this thread in the GMC Discord channel, and Sleety has been hired by the GMC to do some work on design stuff, or whatever the community wants basically. And he says that he's got a couple of updates. He says worked on the potential GMC logo design, combined rocket, ETH logo, star stuff, and some planets posing as coins, tokens to represent the effective allocation of funds by the GMC. So I'm aware this is a massive priority, but I think that it would be nice to furnish the GMC with some solid branding and move on. He says, I like it, works well as static or animated design. And then he says that it could be made more iconic, like in the demo space badges below. He says, let me know if the GMC likes it. And these designs are absolutely beautiful. There's some really, really nice designs that Sleety put together here. There's even an animated logo, and there's MP4 version as well. That's like really nicely high res, and it's like on the infinite repeat. So like the GIF kind of just lines up with itself and just keeps looping forever. Schifrin says the IMC is going to be jealous. Of course, Pateris, who is on the IMC, says I request a superior logo for the IMC, but yeah, that looks really good. And then Sleety already also put out an explainer. So he says, here's explainer requested by Ramana. He said, like the idea because anyone new to Rocket Pool could, it would be confusing to know that there's two different tokens in the ecosystem, RETH and RPL. So he says there's a Ramana script that Sleety used and made a 1 minute, 10-second video explainer of putting that together. So he's still trying to like clean some things up and figure out what to do with it next. But here is the video. It looks really cool. I wish I could play at like 2 speed or something, but I'm just going to zoom through it really quickly. So there's artwork kind of explaining what RETH does and how it works and how you gain money against ETH over time. And then there's RPL and what the RPL does and what RPL lets you get basically, and how it comes together with the yin and yang imagery between RETH and RPL. So that's really cool. And then we're just figuring out like how we're going to promote that, and it would be best I think on the Rocket Pool official team Twitter channel. And then he also designed an IMC logo and was playing around with other stuff as well. So that's really cool. And then actually he went and he did the orange version and of the Rocket Pool logo. And it looks like this, which I think, sorry, this is for the GMC server, not the black and white logo, but an orange one. And I think the orange one looks way better. So that's just what I'm thinking right now. But like, it's orange, it's got to be orange. So yeah, Sleety's designs are looking absolutely beautiful as always. And if you are in the community and you think that Rocket Pool could use some kind of design or artwork or infographic or some kind of website, whatever you want, like if you think that it's a really good idea to have that made for Rocket Pool, for the betterment of Rocket Pool as a whole, or any specific part of Rocket Pool, then you can just reach out to Schifrin and he'll tell you where to submit your design ideas. And then, it can be added to Sleety's list of work that he needs to do. And you can have a look at it. But yeah, his designs are always beautiful and I just love his artwork. So yeah, it's really, really cool. Okay, next I talk about this once in a while because it's kind of cool for me personally. I don't think any of you guys find it cool, but Halula runs a script to see who has the longest active streak of messages in the Rocket Pool Discord right now. and I am number one with, number one human after the RPL bot and Rocket Watch. I'm the number one human with 383 days. After that is Valdorf, like right behind, 9 days behind, with 374 days. Bernard, who has a bot that posts in one channel, basically just does that every day, and that's 342 days. Halula's on 303 days, so nice little milestone for him recently. And then there's Genome, Patches, Gator, Neverland Island, Bossy, Eat That Shrimp, Revolier, Ramana, Admiral Ludi, Jasper, Dibsy, Hodger, Dr. Doofus, KPK, Yoakum, and others. So yeah, that actually, like, to get into the top 25 streak in the Rocket Pool Discord, you just need to have posted for 12 days in a row. So yeah, the bar is really low right now. Longest all-time streak, here we have RPL Bot and Rocket Watch. Of course, those are number one and number two. Patches is the longest lasting human at 756 days. Val is at 682 days. And then there's a couple of users who deleted. Then there's RPL at 517 days, Ramana at 473 days. And then we have Jasper, Invis, Yoakum, and me with 383 days at the number 12 position. So if I'm around for another basically 2 months, I will be in the top 10, which is quite exciting. Like, once you get into that top 10, then you know it's real. Yeah, some of the people who I mentioned here are, long lasting community members who were around for a long time. There are a couple of names that I don't know, but they were before my time. But otherwise, yeah, it's all names that we're quite familiar with, and some of the bigger community members. So yeah, that's really, really cool to see. Thank you, Halula, for putting that together. Next, we have an update on the Beacon chain, and this is a software platform that a lot of node operators, if not all node operators, use, and they are now Pectra ready. So Beacon chain's announcement says we are now ready for Pectra. Validated deposits with invalid signatures are now handled correctly. Pectra deposit queue support, accurate activation estimation right after deposit, and there's consolidation and withdrawal operations are now visible on the validator and slot pages. So there's been a nice little update there for getting everything ready for Pectra. So if you are a Beacon chain user, you will get all that information. And Beacon says a fix to our accounting system to support Pectra operations is ready and will be deployed next week. And all changes are visible now on the Hoodie Explorer. So go and have a look at that. It's really, really cool. As I've been saying for the last couple of weeks, we're going to get a lot of updates coming on the clients. And here we have an update from Geth. This is 1.15.10, and this is a bug fix release that corrects issues with the new log indexer and configures the Beacon chain light client for the Electro fork on mainnet. We forgot about this in 1.15.9. So this release is also suitable for following the Pectra fork on mainnet. So yeah, there's got a small bug fix here, and you might want to update your Geth if you're using Geth, which you shouldn't be. Maybe now you can, but use Bisu instead. Go. Anyway, what we have here then is, these clients are going to be doing little minor bug fixes all the way up to probably the day before Pectra. So I'm just going to hold off updating my my software until probably a week and a half from now. Okay, so in yesterday's episode, we talked about the all core devs call that was happening. This is on the execution side, so it's all core devs execution, and how it got a little bit spicy. So we actually have a summary of the call from Tim Byko. So he says next steps, EOF next steps decision on Monday's interoperability call. So it looks like we're going to get a no go about EOF being in Fosaka on Monday. So here it says, execution layer teams, please share your views about the next steps for EOF based on today's conversation on the interop call agenda. And then there's a link. And so we'll make a decision on Monday about any potential scope adjustments for EOF then. If you're not sure what I'm referring to, please make sure you watch the recording of today's all core devs. So that was the spicy part where people couldn't agree on what to do about EOF. And then SFIing the gas limit defaults informational EIP says on the last ACDE, we agreed to make increasing gas limit one of the key features of Fusaka to align on client defaults and keep this as a priority. We've drafted an EIP. It's a bit unconventional, but not unprecedented. CIP 7840. He says we plan to get it merged early next week and formally SFI it in the next ACD. And then this is the one that we covered on yesterday's episode. It says, as we find bottlenecks that prevent raising the gas limit, we should expect minor EIPs to patch them, such as there's different pull requests here and things. Then there's a history expiry next steps. It says it's unclear exactly where different teams stand with respect to dropping history in May. Let's use history expiry to coordinate the next steps. So that is we're actually going to talk about that a little bit later as well, but that's going to make hard drive requirements for node operators much less, which is really exciting. And then there's call summary. Here we have details about Pectra. So mainnet announcement official is out. Panda Ops have been doing their stuff, so that's all good. And yeah, everything's planned for the release next week. And mainnet Shadow Fork started using the latest releases planned for next week. So yeah, that looking good. For Fosaka, things are looking good. EUF, it says there was a lot discussed about EUF. These notes have brief summary. Please watch the full recording for complete context. So I'm not going to go over the full stuff. You can do that yourselves. But yeah, you can have a look at the notes here. There's a lot of detail here. You can just tell that it got spicy. And then with the gas limits, there's some more information related to the summary from before. And yeah, the Sepolia history is going to get dropped in the coming weeks. Team status were unclear on the call, so please upgrade Ethereum Magician's thread accordingly. So yeah, that was a nice little update about the call dive's execution. And then Monday's interoperability call is going to be the one to watch about the EUF stuff and what's going to happen with that. So yeah, interesting. Okay, talking about gas limits, here we have Storm, who works at Paradigm, and they actually have data on a gas limit can be raised and how much it can be raised. So here, Storm says, initial results suggest that all 5 node clients can already support a substantially higher gas limit. Mainnet is currently doing 1.25 megagas per second, and the 5 clients are supporting 80 to 280 times that. It says we still need to come through the edge cases, but looking very promising. Mainnet is currently doing 1.25 megagas. Yeah, megagas. I thought it was a bit more than that, but maybe that my understanding of it's a bit different. It says we're looking at collecting actual data instead of flying blind and performing vibe-based optimizations. The client teams can precisely identify bottlenecks and raise their performances even higher. Massive praise to Camille and the Nethermind team. So we talked about the Nethermind team really pushing the limits on some of this stuff yesterday, but here you can see that we have Neth, Geth, Reth, Bisu, Aragon, and what they're targeting. So mainnet Ethereum target is 1.25 megagas per second, and this that's what it is. And the different ones are doing like way higher than that. So Aragon's doing 105 megagas, Bisu is doing 114. Here we have Reth doing 147, Geth doing 156, and Nethermind doing 355 megagas, which is really, really strong. So here Camille was the one who did some of the testing and benchmarking, and people here then were starting to say this is really cool, this is big if true. And then ABC says the usual question that gets asked in this situation is about state size. It's been a while since I looked at it, but isn't that an issue? Haven't seen anything since changes on statelessness and the such. So Storm says state size won't be an issue until the gas limit grows significantly, and EIP 4444 will increase storage runway by a massive degree. So here's the critical threshold at about 1.8 terabytes, and current trajectory would put us there in about 2 years, or maybe 2.5 years. However, with if you have the if you use 4444, you're going down basically to about 600 gigabytes or something like that. So the sizes are just coming down drastically. Like they're getting to be, the state is going to be much more manageable. And then ABC says, isn't 444 only improving long-term storage and hence doesn't help with state size, which needs to live in RAM? And then Storm says state size doesn't need to live in RAM, although the hot parts of it should live mostly in RAM. The state size is currently hundreds of gigabytes. And then there's some more questions back and forth between them about that. What's really interesting here is that the questions were asked, like, what kind of hardware was this running? and it looked like it was using 32. Yeah, here Toby Kitty says, I'm asking again, what are the requirements? Storm says this was run on the mid-tier 32 gigabyte RAM machine. And then Toby says, this is not scalability, to be honest. I want a toaster node, sir. I'm not a small blocker, but bumping the gas limit to the sky seems irresponsible for me. And then Jasper replied by saying 32 gigabytes is consumer grade in 2025. And here, 5-day-old burrito says, geez, are we really debating if node operators can't afford the extra $18? Can we please stop this madness and just up the requirements? And the consensus is, here's how much it costs. So 16 gig of RAM, which some node operators have, is about 28 euro. I think those prices don't seem right. And then for 32 gigabyte of RAM is 45 euro. The numbers that I was seeing were a little bit higher than that. I was looking at 64 gigabyte of RAM. So this is what I said. There's a tweet that I put out, kind of like subtweeting to that one. I said, I bought my staking computer for about $1,000 in 2021. If Ethereum needs me to spend $1,000 again so I can keep staking from home for the next 3 to 4 years, I think that's fine. I said, a decently powerful bare bones computer is $500, 64 gigabytes of RAM is about $250, and 4 terabyte hard drive is about $200 as well. I said, it's time to step up a level. So this, I'm starting to become convinced of becoming a bigger blocker for Ethereum. I really think that, there's this idea of pushing L1 scalability and the benefits that will come with that. And I'm starting to be convinced that, we can focus short term on L1 scalability and at the same time pushing PDAS, blobs, all of that amazing stuff on the L2s, and, really working on native and base rollups, ultrasound rollups. That's what I was talking about in yesterday's episode. There's a lot of really, really cool stuff that can happen in tandem, and we don't just have to focus on one and leave the other. So, some of the criticism that people had was that, hey, we're asking node operators to spend so much money. The thing that would happen here, is node operation might not be feasible for people who are, for example, Lido node operators or Rocket Pool node operators, after Saturn 1. So if you have 4 ETH and you're coming in and staking and you're spending $1,000 in your hardware, at that point, it's not really worth it for you to be a staker, unless you're doing it for the passion of it, which is awesome. Then more power to you. But your financial incentives will be such that it will take a long time for you to recoup your rewards. If you're getting 3% rewards, for example, or let's just say 4%. If you like juicing it with those lower collateral requirements, and you're getting 4%, then it's still such a small amount that the price of ETH would have to be really high for it to even take a year for you to recoup your costs on your staking. Sadly, that's just the reality of it. So as long as if you're doing it as a hobby, that's totally fine. But if you do want to, if you're running a few validators, a handful of validators, then I think it makes sense to ask people like maybe every 4 or 5 years or at some point that hey, it's time for you guys to upgrade your hardware. I think that's okay. In the comments here, etc, etc. Actually had a really interesting comment saying, I don't think hardware issue. The issue is the bandwidth. I said, sadly, that's a bit more of an issue because some people can't upgrade. It's a real shame, but I don't know what to do about it. And then there was actually another person making the same comment here. Rudolph was saying that you need a 40 gigabyte upload connection. And that actually wasn't... that's not correct. So there was a reply here from Kamil saying that the provider gives that doesn't mean we utilize it. So it says just because 40 gigabytes was available doesn't mean that's what we're actually using. It says some data from one of the heaviest moments so far, the upload speed was 17.28 megabits per second of bandwidth used in average. I said that's definitely possible at home in huge parts of the world. So I don't think that bandwidth requirement is so prohibitively high. I think we're still getting more data about who's running what bandwidth, and it might be in a bit of the higher end. So potentially it could knock some people off the network, which we really don't want to do. Ideally, we want to bring everyone along with us, but the sad reality is that bandwidth requirements have changed overall, and bandwidth availability has changed overall. Over the last 4 years since the Beacon chain launched, and Also, we've had the hardware, the price of the hardware has gone down a lot, for better spec. So there's a possibility, I think, here that, we could say, hey, we're going to upgrade, your node requirements, and you might have to pay $1,000. But if you're running 10 validators, for example, or even maybe not one validator, like one validator maybe could work, because you might be getting maybe around 1 ETH of rewards per year, which could work. Yeah, if you're running one validator, like one solo validator, then that should be fine. Or like 5 or 6 rocket pool mini pools, or 10 of them under Saturn, no, 6 of 8 of them under Saturn 1, and maybe like 15 or 20 of them or something under Saturn 2. So that's the kind of place where I think it might become worthwhile for you to upgrade your hardware. If you're running fewer validators than that, if you're sticking with less ETH, then that it might not be worth it for you. So definitely some hard choices to make, but I think the benefits here far outweigh the cost. We could potentially pretty much 100x Ethereum scalability with the clients we already have right now, and it not really impact too much of the network, provided they don't mind spending a little bit of money. But this is an ongoing conversation, and it's one that I'm still kind of forming my opinions on. So you might see me say different things depending on the day, but that's because I'm still trying to figure it all out myself. But I think I'm leaning towards, hey, I don't mind spending a little bit more money for Ethereum. So yeah. Okay, there's some really interesting things happening. So this is in relation to Ondo Finance, but I'm not covering the Ondo Finance aspect of it, since they're like trying to move to their own L1 now. Like, forget those guys. But the reason why I'm covering this in the Ethereum section is because this will directly impact Ethereum. So what's happening here is Nate Garassi, who you remember from calling the ETH ETF approvals. He says the SEC Crypto Task Force met with Ondo Finance team today to discuss tokenization. So they discussed issuing and selling wrapped tokenized versions of publicly traded US securities. The SEC is giving this an audience. I hope you're paying attention. So this is what I'm paying attention to. Like, a lot of the real world assets that have come online so far onto the blockchain, on chain so far, have been with on Ethereum. Like, stable coins, the vast majority of stable coins are in Ethereum or the Ethereum ecosystem. We also have real world assets being tokenized on Ethereum, like treasuries with the Biddle Fund and others. Most of those are on Ethereum. Even there's new stuff that's coming on ZK Sync, that there's getting some real world assets there. So in the Ethereum ecosystem is where this stuff's happening. But if these gates get opened, then there's potentially trillions of dollars worth of assets that could come on chain, and there will be tokens of the real thing, like representations of the real thing. But it's really, really exciting, and I honestly do feel with people like Etherealize and others now getting more positive about Ethereum and the capabilities of the community and the platform. I think what we're going to see is a big chunk, if not hopefully the majority of it, will find its home on Ethereum layer 1 and then get bridged out to Ethereum layer 2s, whether those are custom L2s, whether those are general L2s, we'll wait and see. But this is going to be really, really cool. Like, I'm so excited about it. Okay, we've got some news out of Gitcoin here, and this is Kevin Owocki, who, I think was one of the founders of Gitcoin and then left for a while and then came back. He put out a post today saying that the Gitcoin lab is going to be shut down, basically, and some of the people who were working with the lab are losing their jobs, and basically they are citing that the grants and retroactive good funding environment has shifted. There's some stuff that's happening on L2s. There's other things that are going on as well. And because of that, and I think maybe they're having financial issues. And it says because of that, they're not in a position to keep the Gitcoin lab going. So they made this decision, and that's here's what they're talking about. The team, they're going to get severance, all that kind of stuff, severance pay. But some comments are really interesting. Lefteris here says, sad to hear, but I totally feel you. Profitability is hard in this market and it's brutal. It's a bit confused though. Does this mean the end of Gitcoin and its rounds? Isn't Grant Stack, essentially the Allo protocols, etc., what you called Gitcoin version 2, the main thing powering grants? And Kevin says, no, the Gitcoin grounds are funded through 28, 20, 2028, 2029-ish, maybe more if you execute. He says only the software business is winding down. So they had a side business where they were providing software services, and that's winding down. Neftari says, I understand. Perhaps the community can somehow pop up and help maintain those with smaller budget from the DAO, being paid project-based. It's all OSS. Of course, the DAO would need to organize this, but it's doable. And there are many people who are vesting interesting in Gitcoin's continuous success. It's made an insane difference to so many projects, Rodkey included. And Kev says, glad to hear that. Always appreciate Rodkey and your constructive criticism, even when I disagree. He says he's going to rest this week and then maybe carry on the conversation next week and see what things look like. So yeah, there's a bunch of comments here about what it means, but it looks like as things stand, the Gitcoin grants will keep going, and they're looking forward to round 24, I think, which will be starting soon-ish. Finally, we're going to finish with some other news, and this is news out of the Federal Reserve in the US, and they put out a post today saying the Federal Reserve announces the withdrawal of guidelines for banks related to their crypto assets and dollar token activities related to changes to its expectations for these activities. So basically what it means is the Federal Reserve had guidance and guidelines for how banks could and could not relate and interact with cryptocurrencies. And what's happening now is a whole lot of those guidelines are being taken away. So it's going to be a lot easier for banks in the US to start working with crypto and touching the crypto economies, maybe even working with DeFi and all this kind of stuff. So a lot of the comments here were actually really interesting. People kind of being anti-crypto, saying the Fed give it and the Fed take it away. Banks can't play with crypto toys anymore. That's person understanding it the opposite way. But every little piece of progress chips away the barriers that have prevented mass adoption of on-chain services like DeFi for the consumers and institutions. This is another good step. But here other people said these are the people who ruined the financial economy in 2008. Now they're going to go play with DeFi, what's going on. And then name unavailable says soon will be forced to use cryptocurrencies that can gain or lose massive portions of its value. If Elon had extra spicy Mexican food the night before, I love not knowing if my money is worth something. So this person has a fundamental misunderstanding of what the banks are going to be doing. I don't think we're going to be using meme coins to as the official currency of the US anytime soon. But yeah, this ICO Beast actually had an interesting take with this. He says, just as a FYI, this is a big deal. He says, we knew it was coming because Jay Powell told us a couple of months ago, but to have it officially, it feels good. He says, it's a big enough deal that financial institution regularity groups, partners at firms are sending emails about it, and large firms are posting client alerts. Choke point is now officially over. So this will impact things like choke point. It will also change things like custody of banking, dealing with DeFi, things like that. And then ICO Burst said, a little bit hasty from me. It wasn't all of the anti-crypto guidance. The one piece from 2023 was left. And then this was, but it appears to have rescinded all. So it didn't, anti-crypto guidance rescind. So yeah, this is the guidance which is still in place. Generally believes that issuing tokens on open, public and or decentralized network or similar systems is highly likely to be inconsistent with safe and sound banking practices. The board believes such token raises concerns related to operational cybersecurity and run risks, and may also present significant illicit finance risks because depending on their design, such tokens could circulate continuously, quickly, pseudonymously, and indefinitely among parties unknown to the issuing bank. Importantly, the board believes such risks are pronounced where the issuing bank does not have the capability to obtain and verify the identity of all transacting partners, including those using unhosted wallets. So it seems like the SEC are still, the Fed is still saying that, the banks shouldn't issue their own tokens. But other than that, it looks like it's all go. So yeah, that was from Caitlin Long, who runs a bank, by the way. So that's what she's just saying here. So yeah, this is really, really interesting. So yeah, on that note, I'm going to end today's episode. So thank you all for watching, listening, and being part of the Rocky Field community. I hope you all have a lovely weekend ahead, and I will see you all on Monday. Bye.